Why do people invest? Some people invest to increase the value of their money. Some invest to secure their future, and some invest to achieve financial freedom. And some people have got a lot of money and they just want to invest. So, no matter what the objective is, securing your invested capital is the most important parameter. And that's why people invest in real estate, because you get a physical product in return of your invested capital. As they say, change is the only constant. So with the changing times, real estate investments have also evolved and adapted with changing needs. आज मार्केट में हाइब्रिड मॉडल्स और एडवांसमेंट भी हो गई है रियल एस्टेट इन्वेस्टमेंट्स में, बट विद द एडवांसमेंट there's a natural risk which has associated with real estate investments as well. So आज मार्केट में बहुत टाइप के ऑप्शंस अवेलेबल है, REITs, प्री रेंटेड प्रॉपर्टीज, वर्चुअल स्पेसेस. Out of all of these options, I believe a pre-rented property is the most secure option. In this video, we will discuss all about pre-rented properties, pros and cons of pre-rented properties, and how to evaluate pre-rented properties. So stay connected till the end of this video to know all about pre-rented properties. So what qualifies as a pre-rented property? A property which has a legitimate tenant with a registered lease agreement. There is an exchange of money, usually a security deposit between the tenant and the current seller oblique owner. And the tenant is either going to occupy the property in next 1 to 3 months, or it is actually using the property. Pre-rented properties are majorly commercial properties, be it office, retail, industrial, or warehouse. They can be categorized into 3 categories majorly: single unit, single tenant, multiple unit, single tenant, or virtual spaces. So now let's move ahead and understand them one by one. Single unit, single tenant. As the name suggests, you've got a single tenant occupying the entire area on sale. Usually the area of such properties on sale varies from 1,000 square feet to 15,000 square feet. This is a good kind of option for people who are planning to invest 5 crore to 15 crore rupees. The example could be that you've got a company which has taken up say 2,000 square feet area or 3,000 square feet area for their office space, or there's a company, it has taken up 10 to 15,000 square feet area. It can be in an individual building, or it can be a smaller part of a bigger floor. In both the cases, it is a good option. The kind of tenants that you get in such kind of options are usually Indian and international retail brands. In case of office spaces, there are MNCs with their zonal or smaller nodal offices, SMEs, your startups, and mid-sized corporates. Multiple unit, single tenant. Usually this kind of area on sale is a part of a bigger area taken up by a single tenant. In most basic terms, it is like buying a pastry, which has the same characteristics of the cake, taste and everything, but you are buying it in smaller portion. The tenant profile in such cases is mid to large size corporates, MNCs, conglomerates, or global retail brands. It is a good option for those people who are planning to invest anywhere between 1.5 crore to 7 crore rupees. Usually the area taken up by the tenant varies from 10,000 square feet to 2 lakh square feet, and the area offered on sale varies from 1,000 square feet to 7,000 square feet. Virtual space. It is actually a hybrid model of multiple unit single tenant category. The area offered in this category varies from 200 square feet to 1,000 square feet. As the name suggests, virtual space, you don't get the physical possession of the property as well as the leasing right, but you get a monthly fixed amount in return of your invested capital in the form of rent. Such kind of properties are also sold in under construction. This category is also sold in under construction projects by some developers under assured rental schemes. For this kind of property, for this category of property, you should do a deep research and find out the builder's background, their financial stability, and their track record in terms of delivering the assured rentals or the rentals on time. Talking about the benefits of buying a pre-rented property. The first benefit is time. Time is money. So you get the tenant with the property. You don't have to get into the hassle of finding a tenant, putting your brain, time and energy into it. Second benefit is that you get the rent from day one. Third benefit is that with the cash flow and with the evaluation of the property, you can get another loan from that property, or you can reinvest the rent into some other investment tool and multiply your money. Fourth benefit is that you get the tenant of your choice. You can choose the tenant, which kind of tenant you want. However, in the case of a non-rented property, where you have to buy the property and then you have to search for the tenant, and only the market conditions and demand supply will decide what kind of tenant you will get. So now let's talk about the not so good part of buying a pre-rented property. The first downside is that all pre-rented properties are expensive than non-rented properties. So you pay a premium to buy a pre-rented property. The second downside is that all the pre-rented properties has a lock-in period, but post the lock-in period, the tenant has the liberty to vacate the place. So in future, the tenant might vacate. But if you buy the right property, you do the right research, and if you bought a property which can easily be released, then it is a win-win situation for you always. The last segment of this video is the evaluation part. But before we move into the evaluation part, let's understand a simple small formula which will help you further in this video. So this is how the price of a pre-rented property is calculated. Price of property in per square feet is equal to rent in per square feet multiplied by 12 divided by return or ROI in percentage. Let's understand it by an example. For example, you have rent quoted as 65 rupees per square feet and the ROI is quoted at 7%. So the price will be calculated 65 into 12 divided by 7%. So the approximate price comes out to be 11,143 rupees per square feet. By multiplying the above price with the area on sale, you can find the net price of the property. As the price is inversely proportional to the ROI percent, so the lower the ROI, the higher the price, or vice versa. This is like a Pythagoras theorem for pre-rented properties. Now let's move on to the evaluation part. Though it is slightly difficult to analyze pre-rented properties because apart from quantitative analysis, there are a lot of other parameters that you have to look for, like the company profile, building profile, location profile, future of the building and that particular property. But for an initial scanning purpose, you can do a little exercise. आपके पास में जो भी ऑप्शंस आ रहे हैं, दिस इज स्पेसिफिकली फॉर ऑफिस स्पेसेस. सो वट एवर ऑप्शंस यू आर गेटिंग फॉर ऑफिस स्पेस, उस बिल्डिंग में और उस लोकेशन में बेयरशेल प्रॉपर्टी के क्या प्राइसेस हैं, देन ऐड 1800 रुपीज पर स्क्वायर फीट इनटू दैट प्राइस. For example, X is the price, then you add 1800. So now the price is 1800 plus X, and check how much premium you are paying over and above this price. What is this 1800 rupees per square feet? This 1800 rupees per square feet is for the furnishing cost, the maintenance cost for the vacant period, and some other miscellaneous costs like brokerages. और इसके बाद में जो गैप आता है, जो प्रीमियम आता है, इफ यू कैन रिकवर दैट प्रीमियम इन नेक्स्ट 5 to 6 years, देन go for that property. If the premium is too much, then avoid it. In case of retail properties, the exercise is a little simpler. You check out what is the price, bearish price of a property on the same floor in that particular building. Then check out what is the price in the vicinity. After that, check out what is the average vacant period in that particular building. कितने टाइम के लिए वो बिल्डिंग में कोई भी प्रॉपर्टी उस पर्टिकुलर फ्लोर पे वेकेंट रह जाती है, एंड सी द गैप. इफ एवरीथिंग फिट्स, then go for it. If the gap is too much, then you can probably avoid that property. So this is the simpler exercise that you can do. More than that, you would probably need an expert's advice and a little deeper exercise and deeper research. So this was our take on pre-rented properties. कमेंट सेक्शन में कमेंट करके जरूर बताइएगा आपको हमारा कंटेंट कैसा लगा, एंड प्लीज डू सब्सक्राइब टू आवर चैनल इफ यू वांट टू सी गुड क्वालिटी रियल एस्टेट कंटेंट डिलीवर्ड इन मिनिमम अमाउंट ऑफ टाइम। दस विदानिया।